everyone, and welcome to this special show, Market Makers, the Next Gen, with me, Avan Dabash, as well as Anisha Jain. I'd like to start off then by wishing our viewers a very happy, prosperous, and of course, a safe Diwali. Joining in on the show today to walk us through their outlook on the markets for the next Samvat, as well as the themes that they're bullish on, is Samvat Vartak, who's partner at Sage One Capital. We've also got with us Charandeep Singh, who's the founder of Girik Capital, as well as Varun Daga, co-founder and fund manager at Girik Capital. Gentlemen, lovely to have you all on board. Thank you so much for taking time out and joining in. Now, it has been a turbulent year, to say the least, for the Indian equity markets, but still, Anisha, in comparison to the rest of the globe, we have done better.
We have done a lot better, and that is exactly the first question that we want to pose to Samvat as well. Samvat, this year has been all about Indian outperformance. Is the next Samvat going to be as resilient for the Indian markets or not?
Yes, I mean, fortunately for us, for India, I think the last 1 year has been really good. I think that's where the problem is, right? So you got to separate the fundamentals from valuation, right? Because returns in the markets are a factor of both, right? So in terms of fundamentals, I think there is no question that India, macro-wise, corporate balance sheet-wise, earnings growth potential-wise, is positioned really, really well. I think it's one of the best markets, at least in the major economies. But problem is that, that's a consensus view. Like a lot of people, believe that that's going to happen, and generally there is a recency bias. So, whatever has happened in the last, say, 12 months or 6 months, most market participants, tend to believe that it's going to happen, even going forward. I think that's where the risk is. The valuation is the big issue, according to me, where, if you look at the top 100 stocks, the median P multiple today is at almost 35, 36 times, which is towards the higher end of the valuation range. I think where the value is in the smaller cap range. So if you look at the BSE 500 and then, if you look at the 400, 300 or 500, in that range, 500th company in that range, that universe is trading at 23 times multiple. So I think this is going to be a stock pickers market. As you can see, the markets have been very, very, opportunistic. People keep on running after short-term themes, right? And so sometimes you run after defense companies, sometimes you run after industrials, export-oriented industrials, PSU banks. As a long-term investor, you have to stick with your long-term view. And if you start running behind momentum, running behind themes, I think you can face a lot of issues. But I think one has to look at fundamentals. One has to look at the next 3 years or 4 years, where India is extremely well positioned, and bet on those themes. You need patience. Sometimes you'll underperform in the short run. But if you stick to the fundamentals, I think this is one of the best markets to be in.
On that positive note, Charandeep, let me take it across to you. Let's use some Diwali analogy then. Do you think that the next Samvat we're going to be like a complete rocket, one way up? Is it going to be like a Fulgari, so consolidation maybe, or a Chakri where we're on our way down?
This is a hard one, Avan. I mean, I must say that, trying to forecast markets over such short periods of time is obviously always difficult. I don't think sitting in October last year, people thought that you'd sit on a year of zero headline returns for the Nifty. Because I think, and I do agree with, Samvat, that, whereas you have a great earnings cycle happening in India right now, you also have the headwind of, somewhat elevated valuations in certain pockets. The good thing is that, Nifty earnings are going almost from 700 to 1,000 in the next 18 odd months. So that does, that'll start hopefully by then building in some valuation comfort. And we are also a pocket of growth in a market or in a world market where you have issues, the whole globe plagued with, worrying about how they'll pay their energy bills, or how they're going to have to foot the bill of high inflation that they're not used to. So the Indian consumer's in a much better place, the Indian corporate balance sheet's in a much better place, and the overall Indian economy, after all the years of pain that they've gone through over the last decade or so, and all the major restructurings that have happened in India in the last 5 to 7 years, it should be primed for nice earnings growth. I think one can hang their hat on the fact that you should have much better earnings growth than the rest of the world. And of course, then you have to be a good stock picker. I think to be able to take advantage of a headline earnings growth, there will be many underlying themes that you can take advantage of if you are a smart researcher and stock picker.
Okay, Varun, and what are those smart ideas that you have for the next Samvat? Which is that space that will be the complete outperformer, do you think?
So there, first of all, happy Diwali to all your viewers and to you, your family. I wish all the best of luck and good health to everybody. So, we have a few themes which we believe that could be very interesting, and there are some reasons for that. One of that would be financials. We've, like Charandeep said, we've had almost a decade of, financials getting restructured, bad loans getting restructured. So I think the NPAs levels, the slippages are at the lows, especially some of the PSUs. If we were just seeing that from an 8% slippage, they're down to 2%, which has been one of their best. So we could see, the financials come back, the growth also will come back. So they are now well staged for a growth. And I think what makes it exciting is that the capital goods sector, because for the first time we are seeing the cap goods sector. What happened in 2003 to 2011, you saw massive growth in the capital goods sector, but after that almost 10 to 11 years of no growth, right? You had a collapse in manufacturing activities, and now for the first time we are seeing that tick up. In fact, we were seeing that pre-COVID. We were seeing that the environmental clearances are picking up, the planning is picking up. You had better numbers in terms of in terms of the entire data. But now after COVID, again we are seeing that pick up, and now numbers are above the COVID levels. So it's very interesting to see what can happen in the capital goods sector. There are a lot of great companies out there, and I think this theme could last for longer. Another theme which we like is the auto theme, where we are seeing that even in the Nifty, the earnings of auto companies are moving from about 1.5% last year to over 5% over the next 2 years. So I think auto is another sector which could be good, and we like these spaces.
All right, that's interesting, and some of the hot sectors that Varun has flagged off. But do remember, towards the end of the show, we've got the Wheel of Fortune as well, so we'll be doing a bit of a rapid fire with our guests and make things a little more interesting. But in the meantime, Samit, you said don't chase a theme, don't run after a sector, because that could get you in a bit of trouble. So what would be the portfolio approach then at a juncture like this, given the fact that you're very optimistic on the India story? You're saying that yes, we have outperformed the rest of the globe. Just looking at the overall valuation metric, what would be the appropriate portfolio strategy for the next Samvat and down the line according to you?
Right. So, as I said, I think it's important that for a really successful investment returns, I think you need valuation as well as the tailwind of earnings behind it, right? So, I mean, as Varun was saying, there are a lot of sectors like capital goods, financials, PSUs, where the earnings momentum as well as maybe a year back, the P multiples were pretty much in favor of that. But many of the capital goods plays, I'm really positive on the capital goods side, because as Varun was saying that, there is the environmental clearance applications, have doubled in the last 3.5 years. There is a lot of interest from foreign MNCs moving their operations in India. The inquiries, that are today ongoing with a lot of pharma companies, whether it's chemical companies, capital goods companies have increased. But again, the problem is that capital goods segment has become really expensive. So in the long run, I'm pretty sure that India will become one of the larger sort of manufacturing hubs, and segments where there is sort of pessimism today are spaces which are export oriented. So for example, pharma or segments like specialty chemicals, which were in favor maybe a year and a half years back, but a lot of the valuations have corrected. I mean, most of these plays are down in the last 1 year. So I think that's where probably the attractiveness is. Other segment which has to do well, because which is real estate. Real estate is very correlated with the salary increase in India, right? And if you look at the BSC 500, the 50% of salaries are in IT and financials. Both of those segments are doing well, right? And we have gone through pretty long phase of stagnant real estate market, last 10 years, right? Again, real estate index, most of the stocks are down in the last 1 year. But, given that the inventory are sort of exhausted, it's almost at, 7-8 year low. If you look at the new bookings, the absorption rate is again at a 10-year high, So I think we are at the start of that phase, upcycle in the real estate segment. And generally, inflationary environment is good for real estate, because as soon as because with inflation, the prices of real estate go up, and people follow returns and prices. With increasing prices, the interest in real estate actually goes up. So I think even that should do well. So what I would say is that there are many themes which are looking really good, whether it's caps code, export oriented, capital good, real estate, pharma, chemicals, even textile and manufacturing, any infrastructure which is needed for putting up new factories, putting up new warehouses. The 5G theme, should do well, but one has to be conscious about the valuation. Just look at themes which have probably underperformed in the last 1.5 years. Most of the time in the next 1.5 years, I think those should outperform. And again, even within those themes, stock picking is extremely important. What I look for typically is, in any segment, even if I'm positive on that segment, if there are too many players, too many competitors, typically as an investor, you don't make money. But where you make money is where there is one player who is so dominant that there is a huge competitive advantage between that player and the rest of the competition. So if you like a theme and if you find such a player, bet on it. I think generally over a longer term period, you will do exceedingly well.
Okay, so that's the theme coming in, that it's a stock pickers market. There are a lot of sectors that look interesting, right, from capital goods, financials to real estate, but it's that leadership stock that you need to really bet on. Charandeep, it's Diwali time, right? And we talk about Diwali Pujan, etc., which is the biggest sector or stock that will bring the Lakshmi this year. If it is going to be the financial space, are you betting now on the PSU names or the private sector names? Because I see in your portfolio there are a lot of financial names, right? Right from Bajaj Finance to Credit Access Grameen, Cholamandalam, ICICI, SBI. What's the top bet?
I'll tell you, at Girik, we, are obviously stock pickers, and we like to bet on themes, of course, but we go completely bottom up, So we build a story on an individual stock. It so happens that our portfolio is sort of populated by 3 to 4 themes. I would say that, one must take cognizance of financials and their impact and the importance in the growing Indian economy as a theme that is always a good buy. If you can find a good bank or a good NBFC at a good valuation, it's always going to be a good buy.
What I wanted to understand from you, what about the entire auto sector? I understand you have been bullish about Eicher Motors, and we have recently seen that Hunter response has been strong as well. But now the other players, the likes of TVS Motors, are also coming into the fray, and we have seen a solid up move there as well. Are you looking at changing the portfolio stance when it comes to auto pack?
Yeah, so if you look at the auto pack, like we said, that even in the Nifty, the earnings are going up from about 1.5% of the Nifty EPS to almost 5%. I think the one theme which we are seeing very dominant there is the UV theme, right? So what we are seeing is that the SUVs or the UVs, I think those cars are being sold more. So what we saw about 5 years ago, about 20% of the market was SUVs. Today it's more than 45%, almost 50%. So it's clearly being seen that Indians are wanting to buy better cars, and even though the passenger vehicle market has not grown so much as a whole, but the SUV market has gone up a lot. So I think that's one interesting theme which we feel is one can play for.
Fair enough. Samit, can't let you go without asking about new age tech, because it's been in the spotlight for sure. Love it, hate it, you can't ignore it. And now, given the fact that a lot of these companies are taking cognizance of profitability, investors are demanding a lot more now from these companies, and perhaps even questioning some unjustified valuations. Where is it that you stand when it comes to new age tech, or rather, what would be the advice as to how one should really approach this space?
Right. Yeah. I mean, this is a space which one has to be completely, I think, aware about. Because you can't miss it. There will be a point when it will become pretty attractive. I mean, we had done valuations for a lot of these new age companies. At that time, we felt that they were valued. Most of these companies, at least the good ones, which we had looked at, whether it was a Nykaa or a Zomato, those kind of plays. According to what valuation we got, when they were listed, they were trading at almost 3x of what we thought they were at. So I think you also get now time to track them, how they evolve. Some of them will be large cap companies. Maybe 5-10 years down the line, they probably will become part of Nifty 50. But it's very difficult to play a theme. Again, it is very stock specific. It depends on how the management executes, what the business model is, what kind of competition comes from outside, because it's a global competition, right? After all, in the new age kind of businesses. But again, it is going to be completely bottoms up. One has to again play cognizance to the competitive advantages, whether even if they are loss making now, are they building their competitiveness so that maybe like Amazon, what Amazon did is maybe 3, 4, 5, 6, 10 years down the line they can make up for the lost ground and probably mint money at that point in time. And if you bet on one of those players who is going to be a survivor 10 years, 15 years down the line, I think some of those companies can become huge multi-baggers.
All right, let's get a move on now. And Anisha, we've got the Wheel of Fortune, Naya Saal, Nayi Shuruaat, and very interesting questions as well. This is going to be a bit of a rapid fire, guys. So we want sort of one-word answers or quick, snappy answers from all of you. So Samit, I'm going to start off to spin the wheel with you because unfortunately we don't have you guys in our studio. This is going to be your question.
Interesting.
Yeah.
So Samvat, the question is, which asset class will outperform in Samvat next year? What do you think? Equities, debt, real estate, what's your pick?
I
That's
think
an easy one.
equities, definitely in India. For India, equities, there is no replacement. Yes.
Thumbs up on equities. Okay,
Just
let's
warm up. Yeah.
Okay, let's get the second question going for you, Samit. And this one is, what is your Diwali pledge? Now, we usually take New Year resolutions, but since this is Naya Saal, Nayi Shuruaat, what are you starting? What's the New Year pledge?
No, for me, I mean, I need to get more disciplined on, anything which is beyond the career. So, my pledge is to become more disciplined on some of the other aspects like, meditation and learning more, regards to, the Vedanta philosophy and Upanishads. And so where I've started, but, I think I could do more there. So for the next 1 year, that's the pledge.
I've heard meditation is game-changing, so maybe you need to peel your eyes a little away from the markets and focus more on your personal life. Last question for you, Samit. Sector to watch out for. So you
have to
flagged
call
off a few.
one this time around, Samit, the top sectoral bet.
I think the top sectoral bet is going to be real estate. That's what I think. I mean, at least over, I don't know about the next 1 year, it's very difficult to pick. But I think real estate, if you play it well in terms of bottoms up, I think that should be one of the better, better one.
A lot of our viewers wish there was a top stock question, but there isn't, and I know none of you will answer it. So, Anisha, let's move on to the next guest.
Okay, Varun, it's your turn now. Get the groove going, because that's the question for you as well. Which is the sector to watch out for? Varun, your call.
So we already talked about sector, but another sector which I think is very exciting is retail and consumption. You know, we are seeing India is booming with consumers, and anybody that is selling to Indian consumers and guys with good franchise, whether it's retail or brands, I think that's one place which could be exciting.
Okay, retail is an exciting spot to be in. Let's get a move on then and get the next question going.
Include sectors like QSR.
I'm quietly going to move the wheel according to I don't know if you'll give that, but let's ask for the. Okay, we've cheated on this one fully. Your multi-bagger idea. Come on, Varun, just give one stock. You've spoken of so many sectors. You can speak about one stock that you think is a multi-bagger.
Your multi-bagger idea is yourself. Spend time on yourself. Spend time on your health, your family.
Going philosophical on us.
Try to survive longer, you know. Try to survive
Smart
20.
strategy.
Try to survive 20 years longer. You'll compound for 20 years more.
Well, as they say, health is wealth. So this Diwali, you're betting on your good health, and that's of course the biggest thing. But okay, let's bring in the last one. And this has to be the stock specific one, or at least the market specific, Varun. Nifty level next Diwali. Give us a number.
And don't get philosophical.
Best guesstimate will do. We won't hold you accountable to it.
I'm a die-hard equity. Yeah, okay, I would say 20,000 plus. Why not? If you have to pick a number, then, you know.
20K plus, that's the view coming in from Kunal. Charandeep, you're in the hot seat, and I'm going to spin the wheel for you. Oh gosh, I can't ask the same question, can I? Let's get in this one. Now, I'm sure this you'll be able to answer. Your biggest regret or something that you wish you'd done differently. Could be market related or even personal.
I don't know how to regret, honestly, but probably like
no one sector or stock that you're saying, damn, I missed out on that one.
Missed out on so many. I mean, you know, I would say not missed out on, but probably wish we had held on to for a little longer. You know, maybe stocks which we sold out of too early. You know, we identified pretty much all the winners, but I think the biggest learning was. Hold on for much longer. I mean, you know, had we held on to these stocks for 10 or 12 years instead of 6 or 7, the upside could have been much more significant.
That's the benefit of hindsight, right? Really hold on patiently to some of those multi-baggers, and they can compound even more from there. But Charandeep, the next one for you, and hopefully this one is a bit more interesting one. Okay, your Diwali pledge. What is that, Charandeep?
I would say a pledge which I've already started implementing is cutting the coffee consumption. That's a genuine pledge. That's something that I'm looking to do self-improve
Okay,
on.
so all the caffeine,
too much
all
caffeine.
the caffeine addicts, I'm sure across the board need to reduce, and you've already started doing that. Good for you. Last question.
Yeah, I saw an Instagram post by Sadhguru the other day. I'm like, okay, this is it. I've been looking for this inspiration from the universe. And I saw this post on Sadhguru where he was talking about, you know, the damages of caffeine. I'm like, okay, fine, it's in black and white. I'm going to do it now.
A message from the universe coming to you on Instagram. Okay, and last and final question, which asset class do you think is going to outperform?
I think equities, equities, but when we say equities, I'm not saying Nifty or stock specific. We'll always be stock specific. I think you have to be in equities. And I think all three of us would agree with that. I'll just leave one data point on this if you allow me. we were digging up some data today, and in the current Nifty 500 composition, there's about 180 10 baggers, right, over the last 12 years. So I think that just says it all. I mean, without worrying about the next year or 2 or 6 months, it's equities all the way. I mean, there is no substitute in India as an asset class.
You want to give us one of those multi-baggers? No, I'm just joking, Charandeep. Will not put you in the spot, but it's been a pleasure having you all, gentlemen. Thank you so much for taking time out and joining in. Samit, Varun, as well as Charandeep, it's been a pleasure having you on board.
And yes, from the ET Now family to your family, a very happy Diwali. Thank you so much for tuning in.